we're going to go ahead and get started. We want to welcome you to University Federal Credit Union's Reverse Mortgage webinar. My name is Jennifer Young, and I'm here today with Taylor Riley to present information regarding reverse mortgages. A few housekeeping items. You know where to find us. You found us on the website, so I don't have to answer that, but I do want to encourage you. We really want this to be interactive. And so I would encourage you, if you have questions, please type them in on the question tab, and we'll answer those periodically through the presentation. I do want to start and tell you, first off, there is a lot of information when it comes to reverse mortgages. There are a lot of details, there are a lot of questions that come up. And so we're going to just give you a brief overview. We're going to try and cover some of the myths and misconceptions about reverse mortgages. And we're also going to try and address a few case studies that will just give you an idea of what reverse mortgages could be helpful in the scenarios. Taylor is going to start off and cover some of the myths and misconceptions, but again, I'd encourage you, if you have questions, type those in and we'll hit those throughout the presentation.
Okay, reverse mortgages are one of these things that I really enjoy to talk to people about, mostly because I think they're an excellent product for individuals who are eligible for them. Also because there's so many misconceptions that come along with reverse mortgages, and I've heard some doozies in my time. So we're going to kind of go over some of them and some of the bigger ones that we hear most often. The first one, a reverse mortgage sells the home to the bank. A lot of times people think that if they do a reverse mortgage that the bank owns their property, and that is not the case. A reverse mortgage is no different than any other mortgage that you have on the home. You're still going to be listed as the owner of the home. However, the financial institution will have a lien placed on the home. So that is no different than when you initially purchased your home, unless you paid cash for the home. Another concern that people have is that their heirs won't inherit anything, and that again is also false. The estate inherits a home as usual, but the lien needs to be paid. The example that we have here, someone takes out a reverse mortgage and owes $50,000 after 5 years. Then the homeowner passes away and the estate sells the home for $250,000. The lender would be paid $50,000 and the estate would inherit the remaining $200,000. So that's just like any other mortgage that they have. Okay, the homeowner could get forced out of their home. That is also false. When the government introduced this product to be able to help older people stay in their home, the whole point of it was to help them stay in their home until they pass away. So the HECM, which is the home equity conversion mortgage, which was the initial mortgage that was set up, called the reverse mortgage, was created specifically to allow seniors to live in their home for the rest of their lives. As long as one of the borrowers is living in the home as the primary residence for more than half the year, they can be able to live in that home for as long as they are alive. Okay, there's no way, reason, anything that somebody would need to go into the home and remove them from that home. They are protected. Okay, someone can outlive their reverse mortgage. It's just a second question or second comment to this one that we just went over. There's not an end date on the mortgage. It doesn't go, okay, you can be able to have this mortgage until January 1st of 2048. There's nothing like that. As long as one individual who's on the loan is living in the home as a primary residence, they can be able to have that reverse mortgage in place. Okay. The next one, the homeowner pays income taxes on the reverse mortgage funds. So the proceeds that they receive, that they have to pay taxes on those, and that is incorrect. One of the few things that the government's very nice about in terms of taxes is the equity in your home. So if you take out cash on a refinance, if you get a home equity line of credit, any product like that, the government doesn't come and take any of those funds. Those are not taxed at all. Those are not added as income. The same thing on a reverse mortgage. The amount that you are receiving yearly, monthly, it is not added as income on your 1040 form that you would supply to the government when you file your taxes. So you do not have to worry about that. The next thing that we hear goes along with that, with Social Security and Medicare will be affected. A lot of times people can't have any other sources of income because their Social Security or their Medicare will be cut. This is the same thing. If you supplement your income with this product, your Social Security or your Medicare benefits will not be cut. So you can be able to talk to the Social Security office. You can be able to talk to the individuals that help you with your Medicare, but this does not add income to your bottom line. So your services that the government's giving to you will not be cut. Okay, there are large out-of-pocket expenses. While there are closing costs to do a reverse mortgage, and there are times where you could have to pay them, it's very, very rare that that is the case. Most of the time, we can just be able to put these into the loan so you don't have any out-of-pocket costs. It's very sad to me when I talk to people further down the line and they thought that they had to pay to be able to meet with us, or they thought they had to pay to be able to do these sorts of products. We can be able to look at scenarios and see that if there's any product available that they don't have to pay any pocket or out of pocket expenses. And so that's something that we can be able to look at and put into our calculation so you don't have to pay out of pocket. So those are the myths and misconceptions that we see most often. There is a comment box. It looks like we have a couple questions that we can be able to address now, and ask these questions if you've heard anything that I didn't cover. We'd love to be able just to squash those at the very beginning.
Okay, so one of the questions is, who are we and who do we represent and what is our stake in this? We are with University Credit Union, and that is who we represent. And our stake in this is a product, the reverse mortgages are a product that we offer to our members, just the same as we offer a full service of mortgage options and mortgage products. Reverse mortgages is one of those products that we offer. So thank you, Stephen, that's a good question. Another question is, what are the qualifications to have a reverse mortgage? And we actually will cover that in just a minute. We'll go into detail on that one. Likewise, there are some additional questions that we'll address in just a few minutes. So I'm going to wait for the rest of them for just a few minutes. So what is a reverse mortgage? A reverse mortgage is just exactly the opposite of what a traditional mortgage. So when you think of a traditional mortgage and you think of, you go and buy a home, you put a minimum down payment and you have a large mortgage. And if you will, if you look at the graph, the mortgage starts out at the highest point, and as you make your monthly payments, it pays it down. A reverse mortgage is exactly the opposite. A reverse mortgage starts at a lower amount and gradually over time increases the balance of the reverse mortgage. Now that we'll address, I'll have Taylor address in just a minute of some of the options of how that works. Some of that works by just interest accruing on those funds, and some other ways. But what the reverse mortgage does is it allows you to essentially supplement or live off of the equity of your home that you've been able to save and establish. It gives you the option of not only utilizing that equity, but not increasing your monthly obligation by that. So you will not have a monthly payment on that. And it gives you that security to be able to stay in your home as long as you like, until either you're ready to sell, or if you would like to stay there until you have passed away, then it becomes your inheritors or your whoever takes over that home. At that point, the loan will be paid off and the home is eligible for whoever else. So a reverse mortgage, again, works opposite of what a traditional. Starts out low and accrues over the time of, over the life of the loan. Hopefully that gives you an idea of what a reverse mortgage is.
All right, who qualifies for a reverse mortgage? The homeowner or homeowner 62 years of age or older and own or be purchasing the home that is considered a primary residence. So when you have if you are not purchasing, if you're doing a refinance into a reverse mortgage, at least one of the individuals needs to be 62 years or older. Okay, the home must meet standard appraisal guidelines for property type, value, and condition. And then since the borrower does not make a monthly mortgage payment, there is a normal income and credit review to ensure the reverse mortgage is the best solution. So they'll go through and make sure that you can be able to financially qualify for the reverse mortgage. A reverse mortgage does not have a normal debt to income ratio as a normal conventional product would. They have their own graph depending on where you live in the United States. It's very rare that people do not qualify for a reverse mortgage. Okay, it looks like we have a question right now.
So hopefully that answered. We did have a question of who qualifies, and hopefully, Stephen, that answered your question. There is a question, what are the specifics as to the amount of money paid out to the borrower via the equity in the property. Is it true that the interest on a reverse mortgage is higher than a traditional mortgage?
I haven't seen that in the case. There's multiple options that you have because we have fixed options. We have home equity lines of credit that are on variable rates. The rates I don't find are any higher. They're in line with when you are getting your mortgage at the present moment. I mean, it's possible depending on the product that you select and the closing costs that you have that your rate could be higher, but that is just like a traditional mortgage. You can be able to have different options that you take a look at with buying down the rate, rolling in the closing cost to pay rolling the closing cost into the rate, so you take a higher rate. This is the same sort of thing. So there are options are available. We'll go through and present all the options and let you make the best decision for you and what you're looking for. So we can be able to present all those options to you so you're comfortable with what you're doing.
One of the questions also asked, what was the percentage of payout? Just to clarify, every scenario is different, and qualifying for a reverse mortgage is based on age and the loan to value. Everything is age-based, really, with the reverse mortgages. And so when you ask about the percentages that are eligible, the older that you are, the more available the amount of your equity. Let me just give you an idea of what I'm talking about. 62 is considered very young for a reverse mortgage. And so if you're 62, then they expect your life expectancy is going to be longer. And so they're not going to allow you to take as much equity in the home. Likewise, if you're 80, then they're going to say, gosh, they're 80, their longevity maybe isn't as long, and they're going to allow you to access more of the equity in your property. Because, as Taylor explained, because there is no time frame on this, there's no end, you're guaranteed to have this mortgage in place until you either move out of the home as your primary residence or you pass away. This loan doesn't have an end date on it. And so the end date is a guess. And so it's based off, they base their decisions based on that. So the older you are, the more access to the equity, the younger you are. And isn't that nice to say 62 is young? I love that. So anyway, hopefully that explains just a little bit of the question that was there. And let's move on. Is it safe?
So it is safe. One of the questions that we had that came in a couple minutes ago, it talks about what are the down risks to it. I'll address that just after this so that we can be able to talk about that briefly. HUD, the Housing and Urban Development with the federal government, brought out this program in 1988, and that's what the home equity conversion mortgage. It's the most popular reverse mortgage program available. So Congress has been, they have been instrumental in setting up safeguards to be able to help the elderly. They enacted laws, and as I said, put in the safeguards to assume certain requirements are met for the individuals. It's to guarantee the seniors will not give up title of their home, will not put themselves at risk, at financial risk. Since with Social Security and everything, the government has a hand in making sure that the elderly are taken care of in a way. And so they set this program up with as many safeguards as possible to be able to help people. I think sometimes in the mortgage industry, we get annoyed with the safeguards that are put into place with timing and stuff like that. Going through the reverse mortgage program as much as I have, all of the safeguards that are put in place are really, really good, and they've done an excellent job of putting this product together to ensure that people are in the best position possible. So the other thing is paying off a traditional mortgage with a reverse mortgage secures the home and can help mitigate the risk of foreclosure that may occur on a traditional mortgage. So once you get into the reverse mortgage, you're not making a payment. You can live there as long as you want, as long as you're paying your taxes and your insurance, like the property taxes yearly on the home, and the homeowner's insurance, you can be able to stay in the home. So it really protects you. It's more safe than a conventional mortgage because you can be able to be in the home as long as you are paying those costs. And if you look at the cost of rent compared to the cost of just paying homeowner's insurance and taxes each individual year, it's going to be very, very, very safe for them to be in that, and they can be able to pay a very little amount. Some of the down risks that you do have with it is I feel like a reverse mortgage, once you go down the reverse mortgage road, that should kind of be your end game. And when I say the end game, it's not something that you should do and plan on, okay, I'm going to only do this for 5 years and then I'm going to be able to get out of it. There should be a lot of thought and deliberation into, is this the right product for me? And in a lot of situations, I do believe it is the right product for people to be able to help them in their current finances and what could be going forward to not only secure the home to be able to live in by one individual, but when one individual passes away, to have another individual in that home in a relationship. So it's something that can really be beneficial for the individuals that are wanting to get into the home. So that can be the downside to it, is that it's not something you should just walk into with your eyes closed. It's something that we should make sure that is the best product for you.
And let me just clarify too, you need to know, again, this is one more product that we offer, and we are we really do make it a habit. We sit down with you and we counsel with you and we look at multiple different scenarios. That's our job. Our job is to give you a lot of different options, and your job is to choose what is best for you. You'll never be swayed to go one way or the other. You'll always be given options, and then it's up to you to choose. And this is another, what we have found, and Taylor will go over that in great detail in our examples. What we found is this is a great product for certain scenarios. It's not great for everyone. It's not the right decision for everyone, but it is a very good option for a lot of people. And that's why the credit union has decided to go ahead and offer this product. So hopefully that helps you. You know, we aren't going to try and sway you one way or the other. We're simply going to provide you with all of the information that you need to make an educated decision. One of the things that I want to make sure that Taylor covers also is, did you already talk about the education that they're required to go over?
We briefly went over it, but we can talk about it a little bit more in detail right now.
Okay, I think it's really important to know one of the steps that's required, and so talk about the education that they're asked to do.
Yeah, there's an educational seminar that the person who's applying for the loan has to go to, and I believe they have to take another individual, whether it be a child or somebody else younger, to help them understand what's going on. That individual is completely separate from the financial institution, so you're stepping away from anybody who's helping you with this mortgage to talk to this other individual. They've gone through the courses that they need to be certified to be able to do this. The class, the individuals usually at 60 to 120 minutes long, so an hour to 2 hours. They go through, they talk to you about the reverse mortgage, they talk to you about potential pitfalls, they talk to you about the money you're getting. It's a really, really good class to educate people about the reverse mortgage and what you're trying to accomplish. So as I said, the government has set up a lot of safeguards to be able to protect the elderly and make sure that they are doing everything that they need to do to make sure that these funds in this home will last them the rest of their lives.
That's great. Thank you. Okay, how can I use my funds?
All right, so with reverse mortgage, you can use your funds in any way you choose. So some obtain the reverse mortgage only as a safety net to be used in emergencies. Others get rid of the monthly payment because they don't want to pay it or they can't afford it. For others, it's used sparingly for home repairs, property taxes, unexpected expenses. When you have equity in your home, that's great, but some people that struggle a little bit more financially or it's a little tighter, they need to be able to use that equity. And so a lot of times people think, oh, I'll just get a home equity line of credit. Well, that's an excellent product. There's payments that has to be made, and sometimes that's not feasible for the elderly to be able to do that. So that's where a reverse mortgage can be beneficial. So you can use your funds for whatever you want to use them for. You can increase your lifestyle. You can just be able to have them as a safety net. So that's completely up to you. That's where that educational class will come in. Well, they'll talk to you about what you're trying to accomplish, what you're looking to do to make sure that you and the individuals that are helping you make the decisions are putting yourself in the best position possible.
Okay, we have a really good question. Stephen, thank you for your question. If loan is based on a current value assessment, what happens if the value goes up or down in the future?
So when they go through and they look at the value of the home, they are going to estimate that the value of the home is going to go up. If the value of the home goes down, that is not your problem. They are set, the guidelines that you have and the agreement that you are making is that you get to live in your home and these funds are available for you. So if the house value goes down, you can continue to live in that home for as long as you are, it's your primary residence, as long as you're there more than 6 months out of the year. It's not really a concern for you. So if the house value goes up, they're anticipating that house value going up. So that's something that if you do a line of credit, a little bit more is going to be available for you each individual year.
Thank you. That's a great question. Thanks, Stephen. And a follow-up to that, what if I have a current home equity loan on the home?
So the reverse mortgage, when it gets put in place, it would pay off your home equity line of credit. It's one of the only downsides that I've seen with the reverse mortgage. They don't allow you to have a home equity line of credit behind the reverse mortgage. So if you have a current home equity line of credit and you like that to be in place, that no longer would be available for you. However, you can be able to have a home equity line of credit with the reverse mortgage product. So those funds can be available if you want to, but you can't have the home equity line of credit with a different financial institution that's accessible for you.
It's a good question. Thank you. Okay, let's go on. Tell us about your example number 1.
Okay, so these examples are a couple that I have that I've just come up with. We've got some detail with them and everything else that goes along with it. So Jim and Barb were looking for home mortgage options. Jim was 74 and Barb is 72. They currently have a first mortgage with a balance of $54,000. They decided to put this on a 15-year loan so that they could be able to try and get the loan paid off as fast as possible. Their payment with taxes and insurance is about $1,370 a month. They recently had to get a roof replaced and a new HVAC system, so they got a home equity line of credit. They owe about $20,000 on that. The other debts include an auto loan for $32,000 and $12,000 on a credit card. Their total monthly debt totaled about $2,270. And they have multiple sources of income. Jim receives Social Security. Barb also receives Social Security. We got $1,911 and then $632. Both of them have a pension. Jim's is $432 and Barb's is $378. Barb also works as a crossing guard at a local school district and receives about $400 a month during the school year. So their income is about $3,350 to $3,750 a month, depending on which month that it is. At first glance, when I first started looking at the finances, I thought, oh, okay, they got $1,500 a month for other expenses. This should seem comfortable. Maybe we could just look at a 30-year mortgage and go with the conventional route. But once I started to look at their total expenditures and asking them questions, we saw a different scenario. Their monthly obligations, they had $78 for auto insurance, how much they spend on food in the home, how much they spend on food outside of the home, fuel for their vehicle, their utilities, and then their charitable contributions that they make each individual year on their income. That totaled about $1,325. So when I looked to see how much income they had, because one of the things when I saw $12,000 in credit card debt, that's quite a bit to be able to have if they retired at a normal time frame to be able to accrue in a 6 to 9 year window. So, but their total income they have is about $3,700 while she's working, and then they're spending about $3,600. And so obviously they don't have enough money to be able to live comfortably in the event they have to replace something big like the roof and the HVAC system. So they came to talk to me about completing a 30-year refinance. Once the numbers were completed, I showed them we could combine all their debt and their new monthly payment would be $835 a month. So that would be a lot better than what they were paying at $2,270 a month. Combining all their monthly expenses, their new out-of-pocket would be about $2,160. Jim expressed to me that Barb loves the kids and seeing them every morning as a crossing guard, but it's beginning to be difficult with her, and that $400 was making a huge difference for them at that time. Their long-term monthly income was going to be about $3,350, and their debts were still going to be the $2,160, so leaving them a little bit more than $1,000. Well, that was much better than the situation they were currently in. It wasn't as good as what they had hoped for and that I had hoped for. And so we looked at some other options. I asked some other questions, and then I presented the reverse mortgage. So we combined all of their debt into a reverse mortgage. And since they had $3,353 a month of income, they opted not to receive a monthly stipend. It wasn't something that they needed, so they just needed to get all of their debt paid off. So they took a fixed rate option. The funds were available to them if they needed them, but that's not something they needed at the present moment. So with their essentials that they had to pay each individual month, with their taxes, insurance, and then their regular bills that they were paying, they would have about $2,000 a month of income to be able to feel more comfortable. They could start to save money. They could be able to prepare for what was lying ahead for them. Also, they were able to relax a little bit, enjoy their retirement. And so this example was able to take a situation where we thought a 30-year mortgage was going to be the best thing for them and look at a reverse mortgage, and they were very, very happy with it. So they had equity available that we were able to put everything in and get them into a much comfortable situation.
So peace of mind, that's
Yeah.
that's a great option. Okay, example number 2.
The second example is something that we see and is going to be something that's going to, in my opinion, be more prevalent. So Lee and Mary currently live in a home in Sandy. They built the home in 1978. It's a split entry home. If anybody knows about a split entry home or any home in Sandy, there's lots of stairs involved. And so Lee and Mary were concerned about the amount of steps they had to traverse daily. They came to me about selling their home and buying a Rambler in Sugar House. Both of their children lived close to Sugar House Park. They wanted to be closer to them to help them with day-to-day items and also get help with day-to-day items if they needed. Lee and Mary's home is paid in full, and they're selling their home for $385,000. The home they want to purchase is $450,000. After they pay their realtor fees, closing costs, they net about $360,000. So they needed about $90,000 to move into the home that they wanted. So Lee and Mary have a total income $2,800. They don't have any other debt. They've been really, really good with their finances to make sure that they can be able to live comfortably. However, just time has changed that. At Mary's request, we discussed a 10-year mortgage for the $90,000. The new taxes and insurance on the property selected is $248 a month. So the 10-year loan payment was $1,180. After observing the stunned look on Mary's face, I asked her what payment she was hoping for. It's always a question I like to ask, but I like to ask it a little bit later in the conversation. She said she didn't want to pay more than $500 a month. I knew that was going to be extremely difficult with $248 of just taxes and insurance. So I calculated a 30-year payment, and it was going to be $844. So Mary turned to Lee, and she said, I don't know how we can afford this. And so while they were concerned about their health, they still could be able to walk and everything was fine. They were more concerned about the finances at that point. And so when I picked up on that, I presented the option of using a reverse mortgage to purchase the home. So you can be able to use a reverse mortgage to buy a home so you don't have a payment on the excess portion. So that would allow them to only be paying $248 a month for the taxes and the insurance. And so after dispelling the rumors of the reverse mortgage, I was able to talk to Lee and Mary and have them discuss it with their children. They decided that moving and enjoying their time next to their children and grandchildren was most important. So they moved into the new home without a monthly mortgage payment. They're only paying their taxes and insurance on a yearly basis. And so they were able to get into the home that they were going to enjoy so they can enjoy their latter years with their grandchildren. One other example that we have on this that we should have put on here, but we didn't, is that, and one thing that we alluded to earlier, is that we have talked to individuals who currently were late on their mortgage. They couldn't afford the monthly payment that they had, and they couldn't qualify for a new one because their income had been cut so much. I don't know how many people have gone through the retirement process, but it always seems like you're going to be receiving less income than what you were anticipating. And so what we could be able to do is we could be able to roll a traditional mortgage into a conventional mortgage, so we can, or excuse me, into a reverse mortgage, so that we can be able to get rid of that monthly payment so that they can be more comfortable in their home. These are all options of how we can be able to utilize a reverse mortgage to be able to benefit somebody. It's not always the best option. In both of these, we looked at a 30-year traditional. We also looked at a 10-year traditional loan, but it just was better for them to be able to get into a reverse mortgage to help them with their finances.
So Taylor, one of the questions that we get often is what happens, is there any benefit to talking to somebody now about the options instead of maybe waiting? What if we've made a couple of payments on our mortgage late, or we've gotten ourselves in a situation where, our credit is suffering because we haven't been able to meet all of our payments?
Yeah. No, you want to talk to somebody as soon as possible. I know that there's a lot of pride involved, and I can't imagine how difficult that would be, but the faster you get us involved, the better off it is. So if you have had lates on your mortgage payment, there are some other stipulations that they have. And I had one situation where the individual was 90 days late after being 90 days late previous and then getting caught up. And unfortunately, there wasn't enough loan to value to be able to help them because they had waited so long. So you definitely want to get involved with us as soon as possible. I understand it's difficult. We understand the severity of what's going on. We just want to present you with the best options so we can be able to get you in the best loan product for you. I'm of the mindset that I want to give options to my members. I listen to you. I'm able to sell products to people because it's actually the product that they've kind of talked their way into. And by saying that is that when I ask questions, it can be able to eliminate the products that they don't need so we can actually find the best product for you. It's really easy to do my job to find the product that best fits you because it just makes sense to be able to do it. And so that's why if we can be able to give you more options, you can be able to decide which option is going to be best for you. You never want to be backed into a corner.
Okay. Just a reminder, there are more questions. We have had several more questions. What I would encourage you to do, our last slide shows you that where you can contact, who can you ask. If you will, just reach out to us. We do have 3 specialists at the credit union. Marky Johnson, Taylor Riley, and Don Taylor are 3 of our mortgage consultants that have specialized in reverse mortgages. You're welcome to reach out to us. You can call them at that 801-481-8840, or you can reach out to us via email, whatever's easiest for you. But again, we're going to try and give you lots of options. We're going to try and answer questions and concerns that you have and try and find the product that's best for you. If it works out to be this reverse mortgage, that's great. If it's another product, then even, we'll try and find what works best for you. So any other questions that you can think of that you want to address?
I don't think so. I mean, even if you have any, if you're not the individual that the reverse mortgage is for, if this is for a parent, somebody that you know, you're more than welcome to be able to give us a call. We don't have to have specifics to be able to discuss a reverse mortgage. If you want to get some numbers, it's very easy for us to, closing costs and everything else that goes along with it. We can usually have those within 24 hours. So we can be able to get a detailed sheet for you, go through some different options. So if you have any questions whatsoever, it's very easy to be able to give us a call, talk to us. We'll get you taken care of. You don't have to worry about, wasting our time or anything like that. We'll go through and make sure that we get you taken care of.
I lied. We do have one more question. So how long does the reverse mortgage process take?
Yeah, it depends on if you're doing a purchase or a refinance. If it's a purchase, then we have to follow the dates that are on the contract, and we'll talk to your agent and you about that to make sure we're setting up realistic timelines. Each situation's different. I mean, they can be 60 days, 90 days. We'll go through after we meet with you and know exactly what we're looking at, how long the time frame is going to take. We're not going to give you an unrealistic time frame, but if you need to get funds ASAP, then you need to talk to us ASAP so that we can be able to get everything going as fast as possible.
And last question, do townhomes qualify?
Yeah, whether you own a condo, townhome, single family home, we can be able to go through and do a reverse mortgage. So as long as the home's FHA approved, which most homes are, sometimes with the condo units and townhome units, that could be an issue, but we can easily be able to find out if it's FHA approved within 24 hours.
Great. Thanks again for joining us. We appreciate it. We appreciate the questions, the interaction. And again, if you do have questions, reach out to us. We look forward to helping you. Have a great afternoon.